we have Swapnil Shah, Managing Director at Senores Pharmaceuticals. Good morning, Mr. Shah. First of all, thank you so much for joining us, and congratulations, you're coming on to the listed market. First up, take us through why is it that you're raising funds? What will the funds, as far as the fresh issue, be utilized for? And give us a breakup of that utilization.
No, thank you. Thank you for having me here. Good afternoon, good morning, everyone. So we are raising 500 crores primary. Largely, it will add our capabilities in the US. So currently, we have oral solids manufacturing in the US for specialty markets and government and controlled substance. With injectable coming in, we can look at multiple different growth drivers, pretty much keeping the same distribution channel that we have, create and do specialty niche kind of products and just add our capability with a 100 crore investment that we have planned. 100 odd crores, we have planned to reduce our debt, so that will be paid long-term debt's going to be paid back, and the remaining is going to be GCP purposes and the issue expenses.
Sure, Swapnil. Good morning. This is Vinny this side. And Swapnil, what I want to talk about, you have also highlighted one bit of a point, if I'm not wrong, is in terms of funding of inorganic growth and acquisitions, right? Some amount is going to be used for that. Anything specific that you're looking at? Which segment will you be looking to grow in? And anything that you've already identified on that purpose as well?
No, thank you. Good morning to you. Yes, we have identified some products that we would like to acquire. Just to increase our product basket that we currently offer in the marketplace that we operate in. So discussions are ongoing. We would be looking at some inorganic product acquisitions. Nothing on the acquisition of plants or anything of that sort.
Okay. One thing that we've noticed is, especially as far as FY24 is concerned, there's been quite a bit of a jump up as far as revenues are concerned. We understand in the year gone by, you had a couple of acquisitions and that actually aided to the growth. So give us a sense of what could be steady state revenue run rate, because it will be tough to go ahead and extrapolate the backward data, given the fact that there have been a couple of acquisitions.
Yes. So these were acquisitions. These companies became our subsidiaries last year, but they were largely run by us from several years in the past. It's just that it got consolidated last year to our list co. Talk about H1 numbers. So H1, we have about done 83 crores on the revenue side with about 24 crore of PAT. We expect going forward, our growth is going to be better than the industry averages that exist today. Largely driven by our niche segment, our unique proposition, unique positioning in the marketplace that we operate in today.
Okay, so then this is what we're watching out for. So the run rate now one should be expecting for would be what? The industry level run rate or better than that? What are we watching out for? And what is the industry run rate? Also in terms of margins is something I want to understand, because in the last few years, margins are also varied in the range of 17 to 46%, and in the last couple of years, it was 20%. So what is it that we're watching out for in terms of margins also?
So the way we realize our revenue is a little different than the other pharmaceutical companies that are realizing. So we work on a profit share basis with our partners. So we don't realize the gross revenue, which are typically our partner who sells the product into the end market, they realize it. That's why you said the variance on the revenue margin side. Secondly, we expect the growth to be more than the average industry, right? So a lot of products, as we speak, we have 51 products in pipeline, out of which 28 odd are CGT category products. So that will drive our growth, as well as on the CDMO, CMO side, we have tremendous tailwind in terms of how the market has shifted from what it was than what it is today on the CDMO, CMO side. So we feel a lot of tailwind on the CDMO, CMO, which will have our better than industry average growth.
Okay, Swapnil, you just pointed out in terms of the CDMO side as well of the business. So I know obviously in the US, there's a lot of opportunity that is building up on that front. There's going to be a change in terms of the government. Investors are concerned about some bit of a geopolitical issue coming in, or how this is going to shape up for the company. If you could indicate that, and how do we see this segment specifically growing?
Too difficult to predict anything, I mean, we keep on hearing different things here and there. I think for us, what is critical and how we are positioned is we have a manufacturing plant in the US, right? So that kind of helps us, so to speak. How things are going to span out, nobody knows. Nobody can comment on it at this point of time. But knowing coming to CDMO, CMO space, we feel there is a tremendous growth that will happen on multiple accounts, as we have a government business that's happening from CDMO, CMO space, as well as controlled substance, where for those products, US manufacturing is mandatory, right? So we have vaults, cages, the entire ecosystem and the infrastructure is in place to access that marketplace. So we feel will continue to grow extensively, definitely more than industry averages that you will currently see account of this.
Mr. Shah, one quick question. Number one, what is the total debt on the books, or what is the finance cost at which you have taken up the debt? Given the fact that you will be utilizing a significant chunk of the proceeds to repay the debt, what will be the annual finance cost savings that we see over there? And also in the last 3 to 4 years, if you could give us a general sense, what has been the price erosion your particular portfolio has seen, especially as far as the developed markets are concerned?
So we have about 220 odd crores debt today as we speak. So I think we are going to repay about 100 crores of debt that will tremendously help save on the interest part as we speak. As far as price erosion is concerned, we are not into para 4 kind of opportunities that usually large pharmaceutical companies are into it. We look at products that are for specialty niche category. CGT product which are already genericized. So once we get approval, the erosion has already happened, right? So that way we really provide a unique proposition to our partners in the marketplace. And all large pharma conglomerates are our partners. I mean, they really want to continue to work with us purely because of the partnership and the uniqueness that we provide them in terms of marketplace.
Okay, Swapnil, thank you so much for joining in with us, and hope to see you on the listing day as well. And good luck with the IPO. Thanks so much for joining in this morning.